evening all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for the last trading day of June 30th, 2021, about 5:11 in the afternoon. Now, we're going to have a lot of data tomorrow. Normally I don't do this, but there's so much data I wanted to show you. You got the Challenger Group for the planned cuts. You got the jobless claims. Then you got the June manufacturing sector PMIs coming out. You got the ISM coming out with their manufacturing sector. And this, you got construction spending. And then you're going to have the EIA for those of you that watch UNG. There's an awful lot of data, and that's going to impact the market leading up to the elephant in the room, the jobs data. So I'll come out of this right now and go back to the charts for you. We had a very, very lively live webinar. People have asked if I'm going to do one this Wednesday. Yes, I am doing one this coming Wednesday again. So you'll get an invite to it. Remember, I don't post them. That's the way I want to do it. It gets you into them, and they're fun. I think today's was 18 minutes, and we just flew through the charts. So let's talk about what we've got here and go right to this. ARK Investments, another high. Remember, we've got two gaps in the chart that I've told you about. So I don't know where this comes to an end, but you're just running, and you're running hard. This is stock that's gone now from up 33% roughly. It was just down into the 97 level. It's up over 130 right now. As we take a look at the next chart, which is the swing line, you've got the constant pattern of higher lows, higher highs. The market has seen a bullish crossover where the 18-day average got over the gray line, the 200. That's friendly. And now the market is running, and I pointed this out yesterday. Every day it's hitting that upper Bollinger Band. That's called that gorilla glue trade. And when you get it like that, it takes the slow stochastic and embeds it. So until there's some shock to the market of some type, this is latched on. You know that the tech stocks are getting the new money coming into them, and that seems to be very clear on the chart to me. In the European stocks, still not in favor. And I think COVID has the reason behind it. This COVID variant, this Delta variant, is extreme. And, you know, I'm worried about America. We have many states, especially in the South, where you don't even have 11 to 12% people have gotten their shots, according to what I was reading today. It's like begging for a problem because this is more transmissible. So then you go to Europe. Well, how many people there have gotten their shots? They're in the midst of that right now, both getting the shots, which is very good news, but also the transmission. When it ends, and the markets will come back to life, but you got to wait for that. In PAVE, you know what's going to be here. You just got to hang around, got to fight a battle as the market's trying to see what do the Democrats come up with to get an infrastructure bill on its own that can make passage with the Republicans behind it. We don't know where we're at. You know, Congress is going to take off for their holiday right now. So behind the scenes, things will go on, but it won't be as out in the press as you think that you might be for a little bit here. AMC, I think the Fast and Furious, which I hated, as I told you. I think other people listened. They brought it back to the 18-day average. I loved the franchise. I hated this particular one of them. In XSD, the semiconductor, the market just keeps running, just like we were looking at ARK, running the upper Bollinger Band. That's just a sign of strength, and it's forcing the stochastic to get up and embed. That can all change in a heartbeat, as you know, when we get the jobs number come Friday. Don't know what that number is going to be like, and I'm telling you, I'm hearing from 400,000 to 1 million. So it's all over the board. PODX coming down. Will it challenge the 1345 area? The trend is still down. The market's staying in oversold territory. I don't think you're attracting new selling when you're oversold. In ESGU, now you have the embedded reading. You're finally backing away from the upper Bollinger Band. You were staying at it almost every day. I think on the first good break in the market, you're going to attract the people that follow that embedded slow stochastic. There's a key moving average they'll be looking for there, and I'll cover that in my morning paid subscriber videos for you. In XLE, you can see that you got lower highs, lower lows. You've made 3 runs, actually 2 runs, to the lower Bollinger Band. Couldn't quite get to it, but you still have momentum pointing down, hasn't turned. The bears are still in control of this. In the emerging markets, still coming down. So U.S. is where the money's going. Parts, not emerging markets, but European stocks going. The Nikkei's still been in pretty good shape overall. By the way, if you looked at the VIX today, I had told traders that in the morning subscriber video that I thought the pros had written puts at the lower Bollinger Band looking for the 18-day average. You tell me what that market did. In the gold market, still bearish. Yes, I expect a rally, but I expect it to be sold by the pros until the red line closes over 21. Now, the danger of doing this in front of the jobs data is immense. So is it time to maybe do this, put your hands behind your back and just back away from the market? Probably until we get to that jobs data. And I know then you'll say, well, I missed a trade. I'd rather miss a trade. If any of you watched what happened in the grains, there's an acreage report, and I told people not to go through these reports. I said, it's flip a coin. You can go limit. I didn't expect it. You went limit up and stayed there in the corn market. Soybeans up, 85, 90 cents a bushel, limits $1. Unbelievable action. And that's because when you go through key reports, and I bring this up for the jobs data, it can change the dynamics of the marketplace, which then the chart has to adjust to. Right now, the chart doesn't have that data, so it's doing its thing. It's just a pointer. I've learned it over the many years. And you know the beauty of being a trader versus an investor in an individual stock? There's always another trade. It's hard for people to learn, but it's the truth. Lower high, lower low. Got to preserve your capital. You're going to be wrong trades, but you don't have to step in front of a speeding bullet to be wrong. When you're in TLT, still going up. This is amazing. We see strong economic data, and yet interest rates continue to break. And that's happening in the futures markets as well. Today you had one of these interesting days, the dollar up, gold up, silver up, which is strange, and interest rates falling. So people were asking me what I think that's from. I think it's COVID. I think you're seeing the move to the dollar because of the fear, the U.S. stock market and the metal markets to a degree betting that they want some safe haven. When I take a look at FXE, you're seeing the impact. That's not where people are putting their money. That's the euro. And you put it together, you try to come up with a game plan, and that's exactly what I try to do for you. So for those of you that trade futures and the ETFs, and remember, in ETF, many of them, DIA, SPY, QQQ, I can go on and on, TLT, they're based on what the futures are first doing. Futures trade 23 hours a day, typically, Monday up until 4 o'clock Friday. Then they open Sunday night and they do the same thing all the way through. You only have your 8-9 hours in the ETFs. So you want to know what the two are doing because there's a definite relationship. And by me bringing out first a 5:40 in the morning recording where I give you the technical analysis, what I think the futures are doing, and believe me, I'm not bashful in that. That's my paid recording. I am saying, I want you to buy here. I want you to sell there. I want you to do this. See how these are covered? We already have over 40 of these in there. We'll make that change so this ad makes sense. But it's all based on each other. So by 8:40 when I start recording my Spider ETF video, what is taking place then at that time is I'm bringing you up to date with what the government reports were, the reaction the futures had, where you're going in these markets, what to look at. I think you put the two together and you have some interesting analysis. You don't have to look at every single chart I do. I break them into the segments and they're listed on our website, so as you scroll through, the segment you want is right there. To give it a try, $16.90. Just go to our website under the word research. You can always call my staff and you sign up for everything right there. Great time. I appreciate many of you coming into today's webinar. I'll see you all tomorrow. Take care.